Good afternoon. My name is Rebecca Ryle, press officer at the Bank of Canada, and I will be moderating the press conference this afternoon. Governor Poloz will be pleased to take questions for about 20 minutes. Before asking your question, please state your name and affiliation. We'll do one question and a quick follow-up to ensure everyone gets a chance, and then we'll see how much time we have left for a second round. Libre à vous de poser vos questions dans la langue officielle de votre choix. Governor, if you're ready, we're going to go to Reuters for the first question.
Hi, Fergal Smith from Reuters. Hi, Governor. When the bank assesses labour market slack, why does it not put more stock in recent data showing higher wages?
Well, we put stock in all those data, Fergal, but that doesn't mean there's no slack left in the market, just that wages may be showing early signs of picking up. I mean, in particular, when the aggregate wages go up, they may be going up only in sectors that are tight, leaving, lots of excess supply elsewhere in the labor market. So that process is one of a gradual sorting, better matching, a shuffling of work, which happens, and higher wages are a key element of that process. Furthermore, I would say wages, despite the fact that they've upticked, are still well below their typical average at this stage of the business cycle. So we know there's slack underneath there.
And you talked about data. Has data dependence, has it diminished now due to the greater uncertainty surrounding NAFTA?
I wouldn't say so. I mean, right now, the uncertainty about NAFTA has been a persistent issue for the full year now. As we've indicated, the way we're modeling it is not per se through how trade effects might sort themselves out, which is a highly ambiguous thing. It depends very much on individual firm responses, and it varies a lot across sectors. But we think the one thing that they all have in common is that the uncertainty is holding back, to some extent, investment decisions. And that's a more profound effect on the economy. Our surveys show us that firms, even the ones who are investing, are not investing as much as they would if they had the certainty about the future of NAFTA. So that, of course, is an ever-present issue for now, at least. And beyond that, of course, we have to evaluate the data as they present themselves. And if the economy, is operating near potential, but we think there's still a transition phase where the economy will build more potential, which is what I have in mind with that, the reintegration into the workforce, combined with investment, those two things together, will mean that potential output should grow a little faster than our assumption. And so that introduces that, as I talked in the talk, about the downside risk to our inflation forecast out there. So that, of course, is balanced by the possibility that we could be wrong about that. It could be that the mismatches are sufficiently profound that we don't get much building of potential through this process, in which case believing it will happen puts an upside risk in inflation, in our inflation forecast. So it's balancing those two things. And as the monthly data points, obviously the quarterly data points are the most important because they have the fullness to them. But in between national accounts, we get the labor market data points, we get the wage data, we get trade data, so we get survey data, we get all those things, and it's about keeping that full array in focus so that we can keep assembling our story as we go through.
We'll go to Christine.
Hi, Christine Oram with Bloomberg News. Two questions, if I may. Just on the issue of cryptocurrencies and specifically blockchain, actually, in this case. There's a lot of potential on the positive side for blockchain to be used for payments and trade settlements and that sort of thing. So what is the Bank of Canada looking at doing in that space, and where do you see the most potential there?
So we've been working with banks and other central banks on several fronts in this respect. On the blockchain side, we ran a project we called Jasper, and we reported on it fully. There are papers for you to take a look at on the website, where we were modeling a wholesale system based on blockchain. That work so far has not really shown us substantial advantages to blockchain over the current type of system that we run. And I mean, the reason is because it's a protected, if you consider it, it's a network of known participants and working still through an intermediary. So the whole I think the big insight or the big advantage of the blockchain is it eliminates the need for an intermediary. So it's when you have a system like that you'll have the biggest increase in efficiency. But it's all preliminary. It's early days for this research. I think that there's a lot of scope for efficiency gains, et cetera, based on that technology, quite separate from whether it's associated with a cryptocurrency.
Just one more. You also talked about new lending guidelines and the impact that they're having on potentially limiting the number of low ratio mortgages going to highly indebted households. So I'm just wondering if you think regulations have gone far enough in addressing the growth in low ratio loans, and if you could elaborate a bit on the risks that you see in that space.
Well, I won't prejudge them. I mean, they haven't even been introduced yet, so it would be odd for me to prejudge whether they had the desired effect. I think that in the Bank of Canada as a key player in the advisory function, that as we give advice up to the Minister of Finance on these kinds of guidelines. So right now, what we're doing is monitoring how last year's changes are affecting mortgage lending. And we'll be watching carefully as the new ones in the new year are put in place for low ratio mortgages, and to watch how the system responds. As I said in the talk, there's a wide range of possible responses. And what we did based on 2016 data, is to calculate just how large the maximum effect could be. And our belief is that people will adapt in various ways so that the macro effect will be quite a bit smaller than that maximum effect, but it's something we need to monitor. It's not something you can just model, because we don't have lots and lots of such changes to the market to put in a statistical model. It's more about doing the arithmetic around it and then kind of putting bounds around it and then monitoring how it actually plays out.
We'll go to Greg.
Yes, Governor, it was a pretty strong warning for Canadians today on the dangers of cryptocurrencies and how they can get burned and how they're simply gambling. Just wanted to know some of your thinking behind why you took such a strong stance right now, and if you actually think it's a big enough threat that it could sort of spill over into the financial system. There's been a lot of sort of mania around it lately.
Yeah, so I think my words were that it's more like gambling than investing. It wasn't as categorical as you made your question sound, but I think that it is a situation which has the ingredients of something that could be a significant disturbance. So I'm hopeful that the system will treat it cautiously from here. I don't want to be boxed into an opinion on what the value should be or any of those things. In fact, I wouldn't really have an answer to that. So, but right now the chart on Bitcoin looks like the left-hand side of an Eiffel Tower, doesn't it? You don't see that very often, right? So it's when we think back to when we had something similar fairly recently, that would be the tech mania back. That's 18 years ago or whatever. I forgot exactly. It was a long time ago now. As the time passes, but when that mania went into recession, The good news is that it did not have, widespread effects. It was a fairly restricted to the stocks in that sector. And people who got in late, of course, lost some money, but they knew it was high risk, I think, when they went into it. So I'm not going to make any predictions about how big this could become or any of that. It just seemed to me that the level of hype around this is quite extraordinary, and so people are asking me about it a lot, so I thought I'd add a few words today.
Okay, and secondly, TD Bank, the economists there, listened to your speech. They say Governor Poloz's speech confirms rate hike coming soon. Is that what you're trying to tell us today?
Well, I think you know well that it's not my style to offer up forward guidance anyway. What we try to do is to give people a transparent look at the issues that we are trying to understand and how they might affect our outlook. And so I don't want to be confirming anybody's bias or rejecting those biases. What we did make clear is that first of all, we do believe that today's interest rate levels are highly stimulative, and that we are becoming increasingly confident as the economy unfolds, and that less stimulation will be necessary in the future. So that's pretty well what we said in the press release last week, and my views haven't changed in a week. In fact, things are progressing nicely, but we need to be, as I said in the speech, cautious, not mechanical. And by cautious, it's not a code word or anything like that. It's just like anybody driving in a snowstorm. You drive a little slower and you watch all the signs along the way to make sure you stay on the road, etc. Similar in this situation, the data are telling us whether we're still on the road, and if we are, then that's great. So we'll continue to be cautious because these uncertainties are still there, and we're hopeful that the data, as they come in, will gradually reduce those uncertainties for us, and we'll become even more confident. But that's a process. I'm describing a process and not putting specific timing around it. I can't.
We'll go to Peter.
Hello, Governor Poloz. You provided some very helpful advice to Canadians regarding what a sound about making sure that they buy sound currencies and to read the fine print on the cryptos in particular. The fine print on the Canadian dollar, as judged by your agreement with the Canadian government, is that you're going to produce 2% inflation each year for 5 years, which means that Canadians are guaranteed to lose 10% of their purchasing power over 5 years and 20% over 10 years. How good a store of value is that relative to Bitcoin and other cryptocurrencies, which during the last 5 years seem to have stored their value quite well relative to the Canadian currency?
So we've been on inflation targets for 25 years now. And that has made a substantial difference to the behavior of the economy. Smaller business cycles, smaller fluctuations in unemployment. Unemployment, unlike Bitcoin, touches every single individual in the economy. When you're unemployed, you're losing income for weeks, months, perhaps a year, whatever. This is a very personal cost of economic fluctuations. And if by anchoring expectations around 2% and holding to them, we reduce those costs in the economy, that's a very, very successful policy framework, and that would be my judgment of it. So if over, the business of choosing 2%, I suppose what's behind your question is 0 would be preferable, because then our target would mean you wouldn't lose any purchasing power. But I think it's pretty clear that that's a very difficult thing to achieve. There are measurement errors in inflation. Everybody's inflation rate is different from everybody else's personal inflation rate, and the target of inflation will play an important role in determining the equilibrium rate of interest, nominal. And so what that means is a rate of inflation of 0 would have a 2 percentage point lower equilibrium rate of interest, and would give the central bank far less room to maneuver when shocks come along to try to mitigate those personal costs associated with fluctuations in the economy. And so we concluded that 2% over and over, actually. We concluded it back in the 1980s, and we concluded it every 5 years, more or less, since the early 1990s. That 2% was a good trade-off, that it's a point where inflation doesn't really have much meaning for people. It's kind of lost in the noise, and they just say, well, inflation's not my issue. Something above that starts to have the kinds of costs more noticeable that you refer to. And something lower than that puts other constraints and gives rise to the risk of a deflationary episode, which can be costly in the extreme for the economy. So that's the short story on why I see no basis for comparing that to something like Bitcoin, which isn't even money.
We'll go to Dave.
Hi, Dave Parkinson at the Globe and Mail. Just a couple of minutes ago, Governor, you did talk about the use of the word cautious in the bank's rate statements. Used it a couple of times now, and it certainly looked like in the last rate announcement that the market honed in on that very strongly, almost to the exclusion of the rest of the text, and saw it as a code word, as a signal, as a form of guidance for the bank being on hold. I'm just wondering if you can characterize how you are using the word cautious, and also if you're comfortable with the way the markets have been interpreting it.
So my interpretation of the word cautious is like it is in the English language, which is you're careful and you watch for signs that you're making a mistake. The metaphor I used was driving in a snowstorm. So if you're going to go home from work and there's a snowstorm that afternoon, you may drive more cautiously. You may have to because everybody else is, and it'll be slow. But that doesn't, I don't think, translate into sitting in your car in the parking garage until the next day and going back to work. That does it. So, I mean, to me, cautious means exactly that. It means being careful and watching for data along the way to reassure you that you're on the right track. So it is not a code for any of those things, Dave.
Thank you. My other question is regarding what you've talked about with trying to gauge the sensitivity of the economy to rate hikes. You have put 2 rate hikes in. I realize that it takes a long time for those to transmit throughout the economy.
Right.
But have you learned anything in the intervening several months? I mean, we're coming up to 5 or 6 months now from the first hike,
Right.
A quarter from the second, sort of thing. Have you learned any more about how sensitive the economy appears to be to those early hikes? I mean, you look at some of the housing numbers that have come out recently, and it doesn't look like that sector has had a huge, there's been a huge impact in there.
Right.
But I'm just wondering what you've learned and how much you've managed to learn so far.
Yeah, fair question. The answer would be we haven't learned very much so far. It is quite early days in the sense that in our models, raising interest rates takes pretty well a year for it to have, a truly noticeable effect on the economy, and then it'll take, another, probably a year, certainly another couple of quarters for the rest of the mechanism to work its way through enough for us to influence inflation. So almost 2 years from beginning to end. So we're only, in the first, half year of this. The situation is muddied a little because we also have the changes to mortgage rules more or less at the same time. And so we know that they will have an effect, but we don't have models of those things. Those are just, administrative type changes, which, as I said in the speech, we've done some arithmetic around. And so We don't expect 50 basis points to have a large effect on the economy. According to our models, even the updated ones would capture the debt effects. And B, it hasn't been much time to pick up on a small effect like that. So this is a judgment that will be reached as the data accumulate, Dave, and I can't really say when we'll feel like we've got a stronger handle on that, but it's only one thing in the mix. I mean, it's a really important one, obviously, and we'll look at it every which way we can. But there'll come a stage where we'll just have to say, I don't think it can be any bigger than this, and so we can run our scenarios with that. And it can't be any less than this, and so we can run our scenarios with that. And so we can kind of bracket what we'd expect to see. And anything else we see, we'd say, well, that's probably because of the mortgage rule changes. And so for that, we'll be able to back out how the housing sector is actually behaving and be able to explain it after the fact. That's the kind of mental experiment that we need to go through. So, you've seen in the national accounts that housing has slowed as a contributor to growth. And that's all we're really forecasting, is that it would slow down and, in effect, next year contribute 0 percentage points to GDP growth. And that's, so we're not looking for a really significant change in that, but just a moderation, So, through time, we'll see if that holds. Certainly, the early signals suggest that some moderation has come in. But as I said, I can't really pinpoint the actual underlying cause just yet.
Okay, we'll take one last question, Canadian Press.
Hello, Armina Lagaya from the Canadian Press. I wanted to get more information about, obviously you spoke at length about Bitcoin and also touched on maybe the need for the central bank to provide some kind of digital currency itself. I mean, you talk about exploring what circumstances that would be appropriate. What circumstances would those be? Some examples, or what conditions would prompt you to push forward with that, as you say, to sort of fulfill the public good function?
Well, we and other central banks are at the very, say, the front end of an exploratory stage on this issue. We just published a paper last week by an author from the bank and an author from OSFI, going into the full taxonomy of issues that should be considered and weighed to see whether it makes sense for central banks to offer a digital currency. I mean, one of the things you would expect to see, though, as a precondition, would be that the use of physical currency that we have today would be diminishing through time. And in some economies, there's more evidence of that than others, but in ours, there really isn't. And so that certainly means that there's no urgency around this. It's more a question of understanding it fully. And as I said in the speech, the provision of central bank currency, cash, is a very important public good to the economy. So for me, the most important question is that operation still succeeding in providing that public good to all those who want to make use of it? And if preferences in the economy are shifting towards, preferring digital this and digital that, then that's the sort of thing we'd monitor, and that would be like, well, in order to fulfill our obligation to the economy, we should consider providing some form of digital currency. But there are multiple other reasons that need to be considered in that. So it's not a simple yes/no kind of situation.
Okay. And the other topic, the first of the three sort of nagging issues you mentioned is cybersecurity. This is something you've spoken about pretty frequently. It's been in the past reports. And one of the things you mentioned is that you're continuing to work with financial institutions to sort of tackle that, some sort of joint recovery plan. What kind of measures can you put in place? Is there some sort of overarching policy or something else that can be added to the current framework to maybe reinforce the system?
Well, I think, the awareness of this issue is very high, and we have very high standards, both domestically and internationally, around this. So I don't really think that the following steps have much to do about policy or imposing different guidelines on institutions, but rather what I was alluding to there is working in practical terms with the financial institutions. So everybody's built really good defenses and they maintain them, and there's constant investment. That's a lot of money being spent in defenses. But the question is, what if the defenses one day if somewhere they fail, then what? So there, because of the argument I made, which is that it makes it into a problem for the system as opposed to just for that organization, we need a jointness to our plan. And so the central bank is in a position to be a facilitator of this and to work directly with those financial institutions and, of course, the payments systems themselves, through Payments Canada in particular, to make sure we all know exactly what we'll do if that day arrives. Of course, I'm very hopeful, and in fact, reasonably confident that it won't. But to be prepared and to have a full business continuity plan that we've all participated in, I think is a great objective, and it's something that we're working on to be more prepared. But I don't want you to get the sense that the system is unprepared, because it is very well prepared. So I'm quite confident in it, but I don't think we should lose sight of how those risks don't just go away. They in fact evolve on a daily basis.
And that's all the time we have. So thank you everyone for coming. Merci.
Thanks, everybody.